What's up, traders? Welcome back. Before we get started, this is not financial advice. I am not a financial advisor. Complete risk disclaimer, trade at your own risk. This morning we went live here on this YouTube channel. If you want to know what time we're going live, we go live at 8:15 a.m. Eastern Standard Time. If I'm running a little bit late, I'll let y'all know down in the Discord. Make sure you join our free Discord. I'll link it in the comments below, and also it'll be linked in the description. Go join. Now, this morning we went live here on the YouTube channel. You can check our most recent live stream upload exactly at the time 26:40 is when we took our entry here on Euro USD. I'm going to break down this optimal trade entry for you guys right now. Now, what we seen here was on the daily, specifically on the weekly, we can see that the weekly time frame is traded from an optimal trade entry. What is optimal trade entry? It is the 705 level, but the optimal trade entry zone is the 62 to the 79 level. Okay, you can see that I traded into it and now it's expanding. What is it targeting? Old highs over here. This is liquidity. Above here is liquidity, right? So we are bullish weekly. If we look at the daily time frame, we can see here that if we were looking at strictly, market structure, shift, structure, whatever, you can see that price created this old high right here from this low wick, shifted up, took out the wick high right here, came down, and it was within this order block or whatever. It validated this order block as soon as a green candle came above it. Again, I don't trade order blocks or anything like that. You can trade it, do what you got to do, but I don't trade it at all, okay? So from there, it began expanding up right there, created this high right here, swing high, created this 3 candle wick swing low. Again, I teach the 3 candle swings just as ICT teaches them in his 2022 mentorship model. He teaches the 3 candle wick swings. Okay, so go learn. You could also watch it on my channel, the 56-minute long video, volume 1 of the OTE pattern recognition series playlist that I have on my channel. Okay, go check it out. Now here, you can see that this was a swing high, right? And then it came down, created another swing high. In this case, it created another swing wick low. I would bring it up to here. Now from here, it took it out. Now I would reframe it. Okay. If you don't understand that, I'm not trying to make this video long. I've explained it many times before. Go watch that video. Okay. I'll link it in the, how about this? I'll also link it in the comments and I'll link it in the description below. Go watch that whole video. If you can't sit through 56 minutes, sit through 20 minutes at a time, 20, 40, 60, just come back 3 times, take notes on that video. You'll understand exactly how I'm applying this, you guys. Just go sit down and invest some time into learning it, okay? Then you can come join us for the live streams and see us catch these trades live. Okay, today we made 2% and you'll see why right here. So daily came down into this optimal trade entry, tapped into the zone 6.2 to 7.9, tapped into it, and it's beginning moving up. What is it moving up to? Previous day's high right here, right? So since I'm bullish on the daily time frame, I was targeting this previous day's high as well, which is going to be Friday's high. And I'll show you how to frame it. Since today was Monday, we don't care about Sunday. We want to go to Friday's high, okay? So now from daily, if we drop to the 5-minute time frame, we delineate our 8:30 to 11 time, Eastern Standard Time, okay? To switch your time, it's right down here. Make sure it's set to New York. 8:30 to 11, this is our time right here. Now we're going to delineate the previous day's high. Sunday, we don't care about Sunday. We go straight to Friday, okay? Friday is right here. It'll be right here. To 16:55 pretty much. And then to the next 00, midnight, right? This is a previous day, right? So you can see right here, this is the previous day's high for Friday. Previous day's high. Previous day's low was way down here, right? And we were trading pretty far away from the previous day's low as 8:30 came. As 8:30 came, we were trending way down here. If we look in the middle of the range, of the current day's candle, we started from 00 right here. So right here, at the beginning of today, right, midnight, you can see that London session gave us that Judas swing to the downside, created the low of the wick of the day, right? Moved up, then it engineered equal highs right here, relative equal highs to like the T. So that engineered liquidity above there. Now, during the day, whenever New York session came, it ran out the London low right here, and then it started moving for buy side, right? Now, based off the 5-minute, it gave us this expansion here. This expansion gave us not only a market structure shift, but it broke structure. It's a break of structure, market structure shift. You know, that's how I frame it. Now, I'm going to frame this expansion based on the very most recent 3-candle wick swing low, which isn't going to be down here. It's not going to be any of these candles. Where's it going to be at? It's going to be at this one right here. I'm going to frame it from here to here. We took entry right here at the green line. Why do we take entry at the green line? Because the green line allows us to get in due to like spread. If spread is really wide or whatever, we want to make sure that we are getting in at the 6-2 level. Okay, the 6-2 level is our earliest point of entry. We want to make sure that we're getting in. We don't want to miss out on the trades, right? If it taps into that level, it's a valid level. It's in our optimal trade entry zone. So the 6-2 assures us that the 6-0 level, I apologize, assures us that we're going to be getting in, likely due to spread. You know, spread can prevent us from getting in once it taps to 6-2 and just moves along if we're not in the early, like if we don't have our entry a little higher than the 6-2, right? So that's why we take entry at the 6-0. Stop loss went below the one at the next institutional level, which would be 9520. Okay. I think we actually had it. No, we had it at 9520 because it was a 5-pip stop, and then we added 5 pips for spread reasons. So it was really, we incorporated a 10-pip stop loss, if you will. And then we're targeting the previous day's highs. And I was actually targeting the 20 level right before it, the institutional level, and you can see that price actually went straight through it. And price took out the previous day's high, as well as today's current high that was made, you know, during London session. But yeah, you guys, optimal trade entry, super phenomenal. Whenever you know that the 5-minute is expanding like it was right here, drop to the 1-minute, look for an optimal trade entry. If that high hasn't been taken out and that draw on liquidity is still there, look at this one right here. It expanded through, right? Came down. Now frame it off the most previous 3-candle wick swing low to high. Came down, tapped the green line, optimal trade entry, enter, you get a scaling opportunity there, but that's not the only one. Right here as well. From this 3-candle wick swing low, this expanded, took out, break of structure to high here. Boom, optimal trade entry, take off. 2 scale-ins, 1 beautiful opportunity. We didn't take the scale-ins live. We just took this one nice 5-minute, but this is how you can incorporate the 1-minute into the 5-minute and get some super phenomenal trades. Great setups all day. Come watch us trade it live. Join that Discord. I'll also link that video so y'all can go watch it and learn before you come and watch us. Until next time, you guys, I hope y'all got some value. Happy trading. Good luck. Stay safe. Take care.